Good morning, everyone, and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday, the 6th of September. Now, markets are a little bit quiet this morning. It is Labour Day in the US, so what tends to happen in US public holidays is you've got low liquidity. You might get an uncertain impact on volatility, mind you, but generally speaking, markets tend to be quite quiet on US public holidays. But what we have seen is a significant reaction on Friday to the non-farm payrolls report. Payrolls were significantly worse than expected, lower than expected, and markets have reacted dollar negative, but also risk positive to an extent because of the fact that it would be pushing back the expectations of the Fed taper. And that seems to be what we're looking at, maybe at the earliest, probably a December start, maybe even next year now. So what we are seeing is that markets have reacted on the back of that. However, today we've seen fairly quiet moves. We're not really likely to see a great deal of direction, as I said previously, but no real data to either change the situation either. But broadly, what we're seeing is a continuation of the dollar weakening or the dollar corrective move in the risk positive moves as well. So with regards to the charts we're looking at for today, just the impact on euro-dollar really from that non-farm payrolls report up towards a key level of resistance, backed off there. But how has the strategy been impacted by that payrolls report? But also looking at gold, similar sort of chart really with a look at resistance but backed away. How are we looking at that strategy there? And also at the S&P 500 futures. US markets were obviously positive recently. A little bit of a consolidation on Friday, and we'll look at the strategy on the chart. So let's have a look. And onto the INFINOX MT5 platform, starting off with euro-dollar, and we can see this recovery trend that we've had in the past 2 weeks now building. Obviously, we've broken that trend lower, but we're now starting to see these moving averages starting to move higher. Now, it had an interesting look at the 119 level of resistance. That is the really important resistance because that was the first real key reaction, key lower reaction high. So breaking through that would confirm the big trend change that we've had in the medium term on the last few months. And if that were to be seen on a closing basis, that really would be the turnaround moment. But we haven't quite seen that, backed away from that on Friday. You could argue, and I'm not really saying it is, but you could argue a bit of a rejection candle, possibly a shooting star, although it had a positive close on the session. So I'm not taking too much weight in that. Also, we've got the strong momentum as well. So just a little bit of a pullback, I think, towards that uptrend, but I'd be looking to use weakness as a chance to buy euro-dollar. Euro-dollar is, or euro specifically, is going to be key focus throughout this week because obviously you've got the ECB meeting, bit of German ZEW data as well tomorrow, but ECB on Thursday, and it'll be a key focus, I think, for markets through this week. But testing that to 119 or 118.90 to 119 area of resistance, close above that would be really key and a strong move. And you can see on the 4-hour chart, nicely progressing on the momentum. And it looks like to buy into weakness. And you've got that 4-hour, okay, so it's 21 4-hour moving average. And that comes in around 1850. So that's basis of support area. On gold, you've seen the broken downtrend. You've seen the progression of a recovery, higher lows and higher highs. It's tested the 1834 level of resistance, just backed away from that on Friday, but still with a strong candle. It looks like this payrolls report that pushes tapering further out has been positive for gold. And I think you'd be looking to buy into weakness on gold. You've got a nice basis of support, reaction low around 1801, so 1800 bucks pretty much up towards 1823. Nice band of support near term. You've got improving momentum now, RSI into the 60s, which is the highest it's been for a few months now, and it really does look as though it's improving. So you've got the 4-hour chart. Let's zoom out one level there. You can see that any time it gets back towards that 50 area, it seems to be buying opportunity time. You can see this run of higher lows and higher highs, and basically back towards anything into the support band, sort of 1810, 1815, 1820 seems to be a nice area to look for the next opportunity on gold, and I think they'll be pushing higher. So again, with S&P futures, well, S&P 500 futures, just a little creep into all-time highs again. Little disappointing candle, you could argue, on Friday. But essentially what I'd be looking at is continuing to play this long uptrend. I say long uptrend, it goes back all the way. 2 levels there, all the way back to last year now, November last year. So it's still a very strong trend higher. All the breakouts tend to be used as the basis of support for the next corrective move. And with that in mind, you've got 44.60 up towards 4,500 area, which is a nice basis of support coming in the next week, 2 weeks, for any near-term corrective move to use as an opportunity. RSI, little stretched, you could argue, but momentum is strong. You could continue to push that move higher, but I think essentially you're likely to still get another corrective move to give you a better opportunity. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where we'll start to look ahead to that ECB meeting. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.